What's going on, traders? Welcome back to another video. This one is going to be about building a specific trading model strategy, and in the last I will go over my personal trading model. So starting with the introduction, a trading model is actually an edge that gives a trader high probability of one outcome or other, as stated by the Mark Douglas. It means that no one can predict the market, but a model or certain strategy will give you a high probability of certain outcome. And thank you to ICT, the MMXM Trader, T-Trades, M-Trades, and Sniper Trades for their insights. And I do not claim any ownership over these concepts. So starting with our first step, the first step is establishing the market direction. If you want to trade efficiently, you need to determine the high time frame direction. As an intraday trader, we want to align ourselves with the next daily candle, the open, low, high, close, up, and very next candle. That's our daily bias. Our narrative can be built through these specific components. First, understanding the order flow, which I have explained in my previous video, defining key levels like PDRs, order blocks, fair value gaps, and the draw on liquidity, where the price is going. That's your draw on liquidity, and from where is it going? That's your point of interest. Recognizing the phase of price delivery, internal to external and external to internal range liquidity, and this is aligning with the draw on liquidity. The internal to external range liquidity is from your point of interest to the external range highs or low, and from the internal to external is from your highs or lows to your point of interest. That's your external to internal range liquidity, and identifying the swing points inside that internal or external range liquidity to then trade it on the lower time frames. Revisiting the MMXM's next day model. The MMXM next day model is a three candle framework: the candle 1, candle 2, and a candle 3. The first candle, the second candle, which is taking the previous candle's high or low. The third candle, which is an open low high close or open high low close, or expansion candle. And according to the MMXM's next day model, the price action will expand into certain direction until some draw liquidity is met. So this is the MMXM's next day model, the candle 1, which is telling us nothing, but that is sold side of the curve and a bullish example. The candle 2, which is closing inside the range. The candle 3, which is an open low high close candle. We want to align ourselves with order flow. If we are bullish, we would expect the third candle to expand higher. And the MMXM next day model also states that the next candles will also continue and then in that direction until some draw liquidity is met. So the third candle expanded, the fourth candle closed over that, the fourth candle and the fifth candle also expanded in their direction. Now the top-down analysis on the daily chart, find the direction of the next daily candle, determine the phase of price delivery, use the MMXM next day model inside the internal or external range liquidity. 4-hour chart, a single daily range is composed of 6 4-hour candles. You have to identify the reversal candle. The next candles will expand according to the next day model. So you have to find the internal range liquidity on the 4-hour chart, and you have to find that reversal signature inside, and then look for the order flow to expand in that direction. The next component is the SMT divergence. The SMT divergence is compulsory for this model because it increases your win rate by 8 to 12%. It confirms a reversal, and it is mandatory before trading the reversal candle. Especially there will be a divergence at that swing point or the high or low that is creating that swing point. So this would be a compulsory component for this model. Now we will be going over our first model, which is the 4-hour to 15, and it is same as the 1-hour to 5-minute, but the protocol is a bit changed. So starting with our 4-hour to 15-minute entries, let's go over the entry conditions. You must align yourself with the order flow that is necessary. The 4-hour profiling, the swing point formation at relevant PDRs, SMT divergence at this swing point. It is necessary for trading the reversal candles, and the continuation candles you would need that order block. M15, change in the state of delivery, closure below or above the opposing close candles. An entry would be post 8 a.m. on the no news days, and on the news days you have to wait for that news release to show you the direction and give you the narrative. The rules will be change in the state of delivery should happen instantly. There will be no consolidation, no counter trend trades, like you don't have to trade opposing to the order flow. And if the change in the state of delivery is far above, which we will go over later, Then you can take the inverted fair value gap entries, no consolidation prior to the change in state of delivery, and if there is a contradictory bias like the bullish and bearish swing formation, then you don't have to trade that day. You have to avoid that. And no trade post 11 a.m. No SMT, no trade. Now the continuation signature for the 4 hour to 15-minute entries. If the reversal candle is not providing you any entries, then you have to look for the continuation. For the continuation entries, it will meet all the criteria above. The continuation candle will be always the third candle of the MMXM's next day model or the swing point formation or the T-Trace fractal model. The entry condition will be a small wick followed by a large body and expansion, and also opposing move creates that order block and enter expansion with small stop loss. You have to wait for that opposing run to then place your stop loss below that order block. All the criteria are meeting, and if the change in straight up delivery is not giving you an entry, then you can use the propulsion block or the continuation order block within the candle 2. So here are the schematic of the model. We have the 2 a.m. candle opposing run, the 6 a.m. candle reversal. It is closing inside the range and it is having that SMT divergence. So all of the criteria are meeting. Now the next thing we want to do is go to the line time frame. So this is the M15 chart. We will trade post at AM. So we have a change in the state of delivery confirming the reversal inside the 6 a.m. candle and having SMT divergence on the high time frame. And the next thing we gotta do is we have to put our limit over here. Stop loss below the body's low or this swing low, and we have to aim for 2R. And alternatively, we can use the 10 a.m. open low high close candle. So here we have a reversal candle according to the next day model. The next candle will be an open low high close or expansion candle. You have to use the wick size. So the next candle open up, then it's created a small wick inside the previous order block, this propulsion block, and then it expanded away. Sometimes the 10 a.m. candle will also purge some lows or created opposing run if there isn't a previous order block. So this is the idea behind that model. Now we will go over some examples of the 4 hour to M15 model, and later in the video we will go over the 1 hour to M5 model. So starting with our daily chart, on the left side I have the gold and on the right side I have the silver daily chart. So we have SMT divergence at these highs. The gold is taking those highs and the silver is creating that SMT divergence. And the next thing is reading the phases of price delivery. So we have a reversal signature. We had an expansion followed by expansion to the downside, aggressive closure below, and we are closing below the up close candles, which is defining the bearish order flow and showing us that the market is going lower. So now we don't have any data on the daily chart, so we can use the 4 hour chart for more data. So going into the 4 hour chart, we know that inside the daily range there are 6 4 hour candles. So drawing a line on our 18 opening, this is our 18 opening. What do we have? We have SMT divergence at these highs once again. From here we have SMT divergence. Now the next thing we gotta do is use the 4 hour profiling and the 4 hour order flow. So the first thing we notice that we have a change in a state of delivery, a closure below the up close candles, and there isn't any relevant period, but if you see it on the silver, we have a fair value gap in the price section right here. Price is supporting that fair value gap. So we also have the narrative of the internal to external range liquidity. Now the next thing is using the 4 hour profiles. So from the 18 opening, we have taken the 14 high and we are expanding to the downside. And here we have the retracement phase on the gold. Gold is taking the 2 a.m. high and also tapping into this fair value gap and creating SMT divergence with the silver on this specific high. So this is our second confluence of the trade. Now the next thing we gotta do is go to our aligned time frame, which is the M15, and wait for the change in the state of delivery to then align ourselves with the expansion. So here on the 15-minute chart, you can see on the right side of the chart, we had a 6 a.m. open, low, high close candle. Now we are near the 10 a.m. opening. So the 10 a.m. will probably create a small wick and then expansion. Signature is the change in the state of delivery. So we have a change in straight up delivery, a closure below the series of up close candles, aggressive up move followed by a down move, SMT divergence at the highs. Now the next thing we gotta do is align ourselves with the expansion and trade it. In this case, we have a small stop, so I will use the continuation candle entry. My stop loss above the body highs because we can see it from the price section. It is expanding and printing large candles, so it won't go to my body's high stop loss. And I will import 2R. So within the next two candles, the 10 a.m. created a small wick and then expanded to the downside. So this is the 4 hour to 15-minute model. This was the first example. Now hopping into the next example, we have taken the previous day low and we have that reversal signature. According to the next day model, the next candle will be an open low high close candle. And if we read the order flow, we are creating higher highs and higher lows. So that means we are in a bullish order flow. And here we have this high, this equal high, and failure swing is our down liquidity. Now from here, I will drop down to the 4 hour chart to profile it. Now on the 4 hour chart, you can see we have SMT divergence at the 2 a.m. candle. The silver is taking the 22 low and the goal is creating that bullish SMT divergence. First step is SMT divergence at the swing point and then reading the order flow. Clearly we are disrespecting this bearish fair value gap and we have a next day model formation on the daily chart. So the next step is going into the aligned time frame. So here on the 15-minute chart, we had that SMT divergence at the London session 2 a.m. candle, and we have a change in the state of delivery confirming that 4 hour reversal. Now the next step is trading post 8 a.m. So we will draw a vertical line on the 8 a.m. Now we want a continuation order block or a propulsion block to align ourselves with the trade. Here we have a down close candle into this fair value gap. If we get a closure above us, then that would be our order block and we will take the limit entry. And also we have SMT divergence at these lows too, which is making that order block high probability. We have a closure above the down close candle into the fair value gap. Now we will put our limit entry, our entry at the next candle. My stop loss goes below this low and I would aim for 2R. And with the next candle we take 10 and we started expanding to the upside. So this was the second example, and now we will go over the 1 hour to 5 minute model. So here back to the PDF, now we will go over the 1 hour to M5 model. It uses the framework that there are four 1 hour candles inside a single 4 hour candle. If we know that the next 4 hour candle is going to expand, then the four 1 hour candles will also expand at that direction too. So we have to position ourselves within the first candles inside that 4 hour candles, waiting for the swing formation on the 1 hour chart. And for catching the candle 2 of the swing point, it's empty divergence, which is compulsory. 5 minute change in straight up delivery, no consolidation prior to the M5 or 1 hour entry, and the entry would be post 8 a.m. inside the kill zone. Point of interest for the swing point can be the internal range liquidity, which is a fair value gap. All high or all low are continuation purchase. If the reversal candle is not providing you that entry, then you have to use the T-Trade's fractal model logic. You have to wait for the new 1 hour candle, opposing run inside that candle third, that new 1 hour candle, followed by a closure, then entering within that next candle. Precondition for the third candle would be a small wick and a large expected body, and you have to wait for that opposing run. So here are the schematic. We have a single 4 hour candle at the 6 a.m. We had an opposing run into this fair value gap with SMT divergence and the start of the 8 a.m. candle. Now we have that swing point formation, that candle 2 closure, and this candle in this case was reversal into expansion candle because it is having that small wick. So on the 5 minute chart, you have to align ourselves within the change in the state of delivery. If you are missing the reversal candle entry, then you have to wait for the new candle. So the new 1 hour candle open up, then made an opposing run followed by closure above, and then we would take the continuation entry inside the new 1 hour candle. So it uses the framework of the T-Trade's fractal model continuation entries. Now for our 1 hour to M5 model, we will use the 4 hour candles as a reference if we are inside an expansion candle. So here at the 5 a.m. we open up on the right side. I have the 4 hour candles. We made an opposing run into this fair value gap or point of interest. the GBP USD is taking this low and the Euro USD is creating that SMT divergence at this specific swing point. So this is our second confluence. Now we have to go to the aligned time frame to then trade the change in the state of delivery or the continuation entry. So here we have another SMT divergence at this swing point too. Now on the 5-minute chart, you can see on the right side, I have the 1 hour candle. So it created a small wick and then expanded. I do not get the change in the state of delivery entry because it was a larger series of candles. So I can use the continuation order block. So here we have down close candles into this change in state of delivery, which is that propulsion block. So I am entering on the retest of that propulsion block. My stop loss below this low and targeting 2R. We tagged N and then expanded to the upside, completing the 2R objective. So for our next example, we are on the NQ 1 hour chart. We have a bearish order flow, as you can see from the candle closure. We are closing below the up close candles continuously. We are in a bearish trend. The first step we need is SMT divergence at the swing point. So here we have a bearish SMT divergence. The ES is taking that low and the NQ is creating that bearish SMT divergence. So relative to the 4 hour candle, the 10 AM is reversing the daily range because it opened up then created the higher wick, taking this high on the ES and creating SMT divergence on the NQ. Now we know that inside the second 1 hour candle of the 4 hour candle, we have created that reversal signature. Now the next 2 hours inside that single 4 hour candle will expand to the downside. So we have the reversal signature. All we need is a change in the state of delivery on the 5-minute time frame. So going into the 5-minute time frame, now on the 5-minute time frame, this is the 10 AM opening. We created that wick first. Then we have a candle 2 closure. Do we have a change in the state of delivery and SMT divergence? Yes, we have SMT divergence and a change in the state of delivery, and also another SMT divergence at this high. So now I will enter at the very next candle because I can tell from the candle size it is expanding to the downside. So I will enter at the next candle. My stop loss goes above this high and I will target these failure swings are just 2R. Now we almost got stopped out and we expanded to the downside. And here you can see if we are missing that continuation entry inside this candle, so we can draw a vertical line on the next candle and we would wait for that opposing run. So that this candle created that opposing run that wake up the next candle followed by a closure below. And now we can take the next candle entry, stop loss above the 50% are the bodies and targeting the next 2R. So this would be our continuation entry. If we are missing the first candle entry, this framework is copied from the T-Threads fractal model, which is in my opinion the high probability and easiest model. So this was the framework of the 1 hour to 5-minute model, and the PDF will be linked in the description. And I will be making more videos about this model in the future. So stay tuned for that. And in the next video, I will go over how to frame a bias using only the 4 hour chart. So thank you guys for watching. Make sure to subscribe to the channel and like the video and see you in the next one.